Welcome back, my dear students. In the previous lecture, I have discussed about the Bollinger Bands indicator on a price action chart. In this section and the next two lectures, you will learn Fibonacci level on a price action chart. From this lecture 1, you will learn strong Fibonacci level indicator, that is the Fibonacci retracement. So in this lecture today, I am going to explain the formation and basic characteristics of Fibonacci retracement level. Fibonacci levels are commonly used in financial market trading to identify and trade off support and resistance level. After a significant price movement up or down, the new support and resistance level are near these trend lines. Fibonacci retracement level. Fibonacci retracement level help to provide price level of support and resistance where a reversal in direction could take place, and it can be used to establish entry point. The Fibonacci retracement concept suggests that market trend to retrace their own behavior over time. This essentially means that Fibonacci retracement follow a continual pattern. Formation of Fibonacci retracement. Fibonacci retracement is typically used to enter trades. By analyzing the high and low of a previous market move, then you can predict how far the price might retrace the given move. The idea is that during the new trend direction, price will retrace back to previous price level before resuming in the direction of its trend. So Fibonacci retracement has potential level where the price can reverse from. The retracement level are 23.6%, 38.2%, 61.8%, and 78.6% and 100%. Although 50% are not officially a Fibonacci ratio, but 50% is also used. This percentage indicates how much of the initial move the price has retraced. For an uptrend, click on the swing low and drag the cursor to the most recent swing high. Let's see the real chart example. This is USD CHF 4-hour chart. You will notice that recent swing low price 0.86020 and the swing high price 0.89320. The charting software shows the Fibonacci ratio for your entry points. Now the expectation is that if the retrace from the recent high, it will find the support at one of those Fibonacci retracement level, because trader will placing buy order at this level at the price pullback. Then for the downtrend to the opposite, click on the swing high and drag the cursor to the most recent swing low. As you can see the real chart, this is 4-hour chart Euro USD. You see that most recent swing high price 1.12015 and drag the cursor to the swing low price 1.10853. The charting software shows the Fibonacci ratio, then you find the entry points. The expectation for a downtrend is that if price retraces from this low, it could possibly encounter resistance at one of the Fibonacci level. Because you want to play the downtrend at better price, may be ready with sell order. So not more today. Have a nice day. Goodbye.